setting new standards in podcast excellence. You have joined the WBT, fully focused on business and taxes. Here is your host, Michael Lodge.
And welcome to the WBT. This is Michael Lodge. So a lot of you thought you were going to be married and live happily ever after. I bet you thought that. You went out there, bought that expensive gown, and then you stood before the judge or the magistrate or the priest, and you said, I do. And then all of a sudden, after a little bit of time, maybe years, you've decided, I don't. And you file for divorce or separation. Well, when you do those things, there are tax implications. And a lot of you don't sit down with your tax practitioner and go over what those issues are, because it will affect you. We have a very complicated tax code that deals with a very complicated matter of divorce. And you need to comply with those tax issues. So, taxpayers who are divorcing or recently divorced, you really need to consider the impact divorce or separation may have on your tax in your tax return. As an example, alimony payments paid under a divorce or separation instrument are deductible by the payer, and the recipient must include it in income. Then you have to consider name or address changes and individual retirement account deductions. If you had any IRAs or 401ks, there are many items that you need to consider and you need to talk to your tax practitioner on. So let's talk about some key tax tips here on divorce. Child support payments are not alimony. Okay, so that is not to be included in income. Taxpayers can deduct alimony paid under a divorce or separation decree, whether or not they itemize deductions on their return. Taxpayers must file a Form 1040, enter the amount of alimony paid, and their former spouse's Social Security number or individual tax identification number. And we're going to talk about that Social Security issue in just a few minutes. So the question is on the deduction of alimony paid. Taxpayers should report alimony received as income on Form 1040 in the year that you received it. Alimony is not subject to tax withholding, so it may be necessary for you to increase the tax paid during the year to avoid a penalty. So to do this, it is possible to make estimated tax payments or increase the amount of tax withheld from wages. Now remember, a few days ago I gave a podcast regarding changing your W-4, sitting down with your tax practitioner in your HR department and deciding whether or not if you need to withhold more taxes or deduct more taxes. Which is the same thing. I just said the same thing. I'm sorry. I should have said withhold more taxes or not withhold more taxes. So you need to look at that change. And that's what that W-4 is for, you to make changes if necessary when getting a divorce or separating. Remember, if you filed jointly before, you had dual incomes. You had his and hers, or his and his, or hers and hers. And now you are just going to have yours. So the tax situation changes. And that alimony that you received, or going to receive, is income to you. And it's deductible to the person paying you. So you need to look at that very carefully. And then if you had an IRA, there are some considerations that you have to think about. A final decree of divorce or separate maintenance agreement by the end of the tax year means taxpayers, you, can't deduct contributions made to a former spouse's traditional IRA. They can only, or you can only deduct contributions made to your own traditional IRA, not your spouse's anymore. Remember, because you're filing a different type of tax return. Now, you can get more information about IRAs if you go to irs.gov and ask for publication 590A or 590B. But remember, you're divorced, and so you can only report the portion of what you pay to your own IRA. You're no longer married, so you don't get to include your spouses. And I bet you a lot of you don't even know that you need to rethink this process. The other issue that's really, really vital, and that is if you're changing your name, you have to notify Social Security Administration. You have to notify them of any changes after a divorce. You can go to the SSA.gov for more information. They have some details there that they can share with you. But the name on the tax return must match the SSA record. So if you used to be Mrs. Jones, but now you're going back to Ms. Smith, that SS number had better match Ms. Smith. So if you want to delay because there's a name mismatch on your tax return, it's going to cause some big problems and delays of your refund if you're getting any refund. That is one of these are some of the issues that when you're going through a divorce or separation, you need to think about. Remember, we have a complicated tax system. And it's a tax code that has very specific language regarding divorce and separation. Sit down, make an appointment with your tax practitioner, and go over these issues prior to the divorce and after the divorce so that we know what the final decree has been. So think about this very carefully. If you're going to go through a divorce or a separation, that there are going to be tax implications on your lives and on your tax return. Think about it before you sign on the dotted line. Make sure that you are in compliance with the tax code. If you have any questions, you can send me an email at mlodge, M-L-O-D-G-E, at lodge, L-O-D-G-E, -co.com. And I will try and answer your questions. Again, this is Mike Lodge for the WBT. I will talk with you soon.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.
Thank you for listening to the WBT with Michael Lodge. Join us again tomorrow as we explore more about business and taxes. Follow us on iHeartRadio and go to our podcast website at www.wbtpod.com and listen to all of our podcasts and read our blogs.